Hey guys, welcome back. It's me, Adam. You're watching Unlimited Options Investing. Let's get right into it. Microsoft earnings beat across the board, stock up on outlook. Microsoft beat expectations on the top and bottom lines. Fourth quarter revenue guidance for each of the company's three business segments surpassed the expectations. The company announced plans in the quarter to buy Activision Blizzard for almost $69 billion. Microsoft shares surged on as much as 6% in extended trading on Tuesday after the software maker issued fiscal third quarter earnings that exceeded analysts' expectations and an optimistic outlook for the current quarter. Here's how the company did. Earnings coming in at $2.22 per share, adjusted versus the $2.19 as expected, and revenue at $49.36 billion versus the expected $49.05 billion, so beating on both the top and the bottom lines. And of course, the market liking it, gapping up today, opening up at 282, now up 5% at 283.68, going up as high as $291. Microsoft's revenue increased by 18% year over year in the quarter, which ended on March 31st, compared with 20% in the previous quarter. Microsoft turned in the smallest revenue beat since 2018, exceeding the consensus by less than 1%. Sales and marketing expenditures totaled $5.6 billion, 10% higher than the year-ago quarter and the fastest growth in more than 3 years. The company's Intelligent Cloud segment, which contains Microsoft Azure Public Cloud for application hosting, along with SQL Server, Windows Server, and Enterprise Services, generated $19.05 billion in revenue. That's up 26% and above the $18.9 billion consensus among analysts. Revenue from Azure and other cloud services jumped 46% in the quarter, compared with 46% growth in the prior quarter. The expectation was 45.3%, according to a CNBC survey of 13 analysts, while analysts polled by the Street Account had been looking for a 43.6% growth. And we can see Azure and other cloud services really driving that growth over the last couple of years, with an average of, let's say, 50%. The number of Azure deals worth at least $100 million in the quarter more than doubled, CEO Nadella told analysts. Microsoft's productivity and business process segment, containing Office productivity software, LinkedIn, and Dynamics, posted $15.79 billion in revenue in the quarter, up about 17% and slightly more than the Street Account consensus estimate of $15.75 billion. Microsoft raised the prices of certain Office 365 productivity software subscriptions during the quarter. The more personal computing segment, which includes Windows, Xbox, search advertising, and Surface, kicked in $14.52 billion in revenue, up 11%, and higher than the $14.27 billion Street Account consensus. Microsoft said that revenue from Windows license sales to PC manufacturers increased 11% in the quarter. Microsoft had projected a high single-digit growth in January. Research firm Gartner estimated that PC shipments fell 6.8% in the quarter, marking the sharpest decline since the first quarter of 2020. After a pandemic-fueled market expansion, shipments rose by 3.9%, excluding computers running Google's Chrome operating system, which became more popular during COVID. Revenue from security products and services falls under each of Microsoft's three segments. Microsoft said in January its security revenue grew nearly 45% in 2021, faster than any other major product category. The company disclosed financial figures from its security business for the first time last year, and Microsoft announced a plan during the quarter to acquire video game publisher Activision Blizzard for $68.7 billion, the largest transaction in Microsoft's 47-year history. Microsoft also closed its Nuance Communications acquisition and laid out a strategy for expanding in healthcare, an industry Nuance focuses on. Nuance took away a penny from Microsoft's quarterly earnings, but added $111 million in revenue. Excluding the after-hours move, Microsoft stock has declined 19% since the start of 2022, underperforming the S&P 500 index, which is down about 12% over the same period. Yeah, it is. Microsoft year-to-date, as of now, is down 15.26%, and that's after going up today a total of about 5% so far. And looking at the candlesticks, we're sitting right below that 50 EMA on the weekly. And zooming out, whenever we're below the 50 EMA, it's definitely been a good buy for Microsoft. probably the most pristine, the best moat in the world when it comes to a public company. Microsoft has no competition for what they do. Similar to Google, which actually missed on their numbers yesterday, they're both eventually going to go back and recover to all-time highs. It's not really a matter of if, it's just a matter of when. Is it going to be this year, next year, or maybe not for a few years? It's anybody's guess. Let me know in the comments below, what are your thoughts on Microsoft stock? Did you like their earnings? At what price are you a buyer of Microsoft? Let me know in the comments below. As always, subscribe and like the video, and check out my description for my links to my Instagram, my TikTok, and my Twitter. I will see you guys in my next video.